Good afternoon and welcome. I am Maria Rosa Vaquerizo. I'm the CEO of the Andean American Associations. These were the very first chambers of commerce that were founded in the US for Colombia, Ecuador, Peru, and Venezuela. These chambers were founded in 1920s and the 30s, and our associations have hosted presidents, ministers, and experts of the Andean region. We have organized more than 1,000 programs over the years. Today's webinar is unstable for the Andean American Associations. It is the 11th time that we have organized the annual Latin American Outlook. We're very honored to have as our partners our colleagues, the Chambers of Commerce based in New York, the Brazilian American Chamber of Commerce, and the North American Chilean Chamber of Commerce. Today it's represented by its president, Oscar Stephens. It is with great pleasure that I welcome our outstanding speakers. Luis Oganes, Head of Global Macro Research at JP Morgan. Jose Antonio Ocampo, former candidate of the World Bank's presidency, Minister of Economy, and currently at Columbia University. Alberto Bernal, Chief Strategist at XP Securities, and our moderator is Kelly Librera. She's a partner at Winston & Strawn. We have today a great pool of registrants. For these programs, we have almost close to 200 registrants, and including, and I want to especially welcome Juana Caicedo Selinger, President of the Ecuadorian American Association, Stephanie Jungermote, President of the Colombian American Association, Jorge Izaguirre, Deputy Consul General of Peru. We have also with us an Andean supporting member, BBVA, and the multilateral agencies. We have with us UN, UNDP, the Inter-American Development Bank, the Institute of International Finance, and ECLAC, ECLAC. We also have members of governments of the Andean region. We have ambassadors, ministries of foreign relations, and the embassy of the Kingdom of the Netherlands. For rating agencies today, we have Fitch and Moody's. Banks, we have Asobanca, Barclays, Citi, Goldman Sachs, Morgan Stanley, MUFG, Santander, Sumitomo, Mitsubishi, and Wells Fargo, among others. Some of our corporations, Cushman Wakefield, General Motors, Vested International Corporation. Universities we have with us, Colby, Georgetown, and Iowa State, among others. We also have friends of the Andean American Association, Felipe Ardila of Tinelo Capital, and Diego Almeida of Almeida Guzman Asociados, and Tinker Foundation. For media today, we have Financial Times represented by Michael Stott and Latin Finance. Welcome to each and every participant. Now I will introduce our moderator of today. She's Kelly Librera. She's a partner at Winston & Strawn LLP in New York. Her practice focuses on complex commercial litigation. She represents insurance companies, financial services providers, and financial institutions in a host of complex disputes and arbitrations. Kelly serves as a co-chair of the New York's Office Associate Evaluation Committee, and she's a member of the firm's Complex Commercial Litigation Advisory Board. And she's also in the hiring committee. Now, I'm going to proceed with some information about the program. You can write your questions via the Q&A button at the bottom of the screen. You have a Q&A button, and you can send your questions throughout the conference. Kelly will facilitate 20 minutes before the end. She will read some of the questions. And now I give the floor to her. So welcome, Kelly.
Thank you, Maria Rosa. Hello, everyone. Good afternoon. Greetings from a very chilly New York. We have a great panel here for you today. I'll take just a minute or two of your time to introduce them, and then we'll get on with the program. The first person I'd like to introduce is Alberto Bernal, who is the Chief Strategist at XP Investments. And prior to this, he was the head of research and a partner at Baltic LLC and a managing director of emerging fixed income research at Bear Stearns. At that time, he was responsible for covering Latin America. Previously, he was head of Latin America economic research at IDEA Global, where he conducted in-depth economic analysis on the region as well. He's a frequent contributor to financial television networks, Latin American press, and major news wires. And he's also a research scholar for Columbia University's Chazin Institute and an adjunct professor at the University of Miami's Business School. We also have the pleasure of having Jose Antonio Ocampo with us here today, who's a professor at the School of International and Public Affairs and a member of the Committee on Global Thought and co-president of the Initiative for Policy Dialogue at Columbia University. He's occupied numerous positions at the United Nations and in his native Colombia, including the UN Undersecretary General for Economic and Social Affairs, Executive Secretary of the UN Economic Commission for Latin America and the Caribbean, and Minister of Finance and Public Credit, on 2 occasions, Minister of Agriculture and Rural Development and Director of the National Planning Officer of Colombia. He's also a member of the board of directors of Banco de la República, Colombia's central bank. We're also pleased to have with us here today Luis Ogañez, and he's the head of global macro research and has worked for JP Morgan in New York and London since 1997. He manages teams of researchers covering the currencies, rates, commodities, and emerging markets globally. On several occasions, Luis has participated in advisory projects with governments and quasi-sovereign entities in Latin America, the Middle East, and Asia. Outside of JP Morgan, Luis is a member of the advisory board of the Graduate School of Arts and Sciences of NYU, a founding member of Help Peru, a nonprofit organization that raises funds to support philanthropic causes in Peru, and a board member of the Tinker Foundation that supports civil society organizations in Latin America. He's also a board member of the Museo de Arte de Lima. So without further ado, I'd like to turn it over to Luis.
Thank you, Kelly, and good afternoon, everyone. A pleasure to join once again this panel organized by the Andean associations. Thank you so much for the invitation. It is a daunting task to speak or try to summarize views about Latin America within 10 minutes, but I'm just going to give you a bit of a brush stroke, hoping that you get some of the key messages for the region. What I would say is that at the outset, I mean, we have to, we're finishing 2023, and there's a lot to be said about what has happened this year. I would say that at this time last year, our outlook for Latin America was certainly probably bleaker than what it ended up being in terms of the growth dynamics. We were expecting, just because aligned with expectations that the US itself could fall into a recession, having seen so much policy tightening from central banks across Latin America, reaching double-digit policy rates in most countries, we thought that, okay, well, this is going to push the brakes on growth in a quite dramatic way. So the projections were quite low for Latin America's growth during 2023. And in the end, something happened, which is growth started to be seen in emerging markets in general quite resilient. We ended up having to revise up several countries' growth projections, not everyone, but in several cases, and external accounts, which we thought were going to be weaker. We were very concerned. Remember that this time last year, China had not yet reopened, and that was putting a lot of pressure or concern about the links via the commodities markets to whatever could happen to Latin American external accounts. So again, a lot of uncertainty that during the course of the year started to get cleared up, and the external environment and Latin America itself showed, resilience. So if we look at countries in the emerging markets world, when we compare Latin America, EMEA, and Asia, that we ended up increasing growth projections. Interesting enough, several of these countries were in Latin America. So that is good news. Now, a lot of divergence within the region, though. And I would say that the one reason why the average ended up being higher than expected was possibly because the larger two economies in the region, which is Mexico and Brazil, that is where a lot of the upgrades to growth were concentrated. If we try to dissect exactly what happened there, certainly there was a bit of a different story. So the two were not being driven by the same reasons. In the case of Brazil, the outperformance was quite concentrated in the agricultural sector, and so there was a positive supply shock, and of course there was fiscal impulse coming from the fiscal stance of the incoming administration of President Lula 2.0, and that provided support to growth. If you were to exclude the agricultural sector, the dynamics didn't look that rosy for growth this year, and that is the biggest question mark for 2024. But so be it. The agricultural sector helped the overall economy. In the case of Mexico, it was certainly a bit different story. There was a lot of domestic demand exuberance, and the policymakers there, particularly Banxico, themselves have admitted that they have an overheating economic dynamic there, which is why this is the one central bank in Latin America that hasn't yet started cutting rates. So other countries in the region, the picture is certainly more mixed. We start with I'm just going to focus on the larger ones. Argentina, in a very, very deep economic crisis, almost bordering hyperinflation dynamics. The growth projection that we have for this year is that the economy is going to drop by 2.1%. The other economies displaying potentially full year negative growth in the region this year is Chile, 0.1% negative. Quite a bit of tightening as well after very overheating dynamics in the previous years that is leading to this result. And of course, a lot of uncertainty driven by some of the political dynamics that I'm sure my friend Alberto is going to comment on in the next segment. And my own country, Peru, the projection that we have is 0.5% negative growth this year. And a lot of that as well probably driven by political events that have led to kind of a standstill in private investment. So moving on to 2024, the question is, what can change, or whether the region, is going to keep displaying some of the similar dynamics of this year. One of the biggest question marks is still the external environment, and I will mention two things. The market is still divided as to whether the U.S. is going to go into soft landing or into a recession, and it will matter whether the U.S. just decelerates but growth stays at positive territory, or whether it falls into a recession. Just because in a recession, typically there is this risk-off environment, and you may see financial markets reacting in a different way, and therefore affecting capital flows into emerging markets. In Latin America, is still a region in need of capital flows. And the other question is obviously China. The one thing that I didn't say about 2023, and one reason why external accounts in Latin America were actually surprised us positively, is that even though China rebounded after reopening and then decelerated in the second quarter, and growth we have all been wondering whether the authorities are going to be putting more and more stimulus in order to support growth. So regardless of what had been happening to investment, fixed asset investment, regardless of what had been happening to manufacturing, PMIs in China, etc., guess what? The demand for commodities, oil and metals, have been quite strong in China. So there's been some dynamics of stockpiling that is hard to explain. Certainly, the authorities have not articulated a reason for this. We can only guess that it's probably some geopolitical calculus here. They're trying to reduce some vulnerabilities for the future, potentially. But the reality is that the demand for commodities has kind of the relationship with growth dynamics has, kind of broken in China, which has been good news for Latin America, because Latin America has been able to keep exporting commodities despite the growth disappointments that we have seen in the Chinese economy. Whether that can continue, I mean, in the end, has been possibly some kind of political decision or geopolitical consideration. Whether that continues in 2024, obviously, is anyone's guess. The region can only hope that this continues so that they can keep selling regardless of what happens to the growth dynamics. Other elements to watch is central banks. Central banks in Latin America, except for Mexico that I mentioned, are already starting to cut rates. Interest rates in nominal and real terms are among the highest in the planet these days. So there is certainly room for rate cuts, but that room is obviously going to be tempered by two things. First, obviously, how much progress there is in each country in disinflation, in bringing inflation lower, and how sustainable that disinflation is, whether economic agents in each country are buying into the story, and therefore inflation expectations get revised lower. And second is what happens externally, particular with the Fed. Right, the market is basically pricing that the Fed is done, and the market is getting potentially a little bit ahead of itself, pricing rate cuts in 2024. The reality is that we don't know exactly what the Fed will do. So that is probably going to be another driver as to how much more policy easing there will be in Latin America in 2024. But provided that central banks continue to cut, or in the case of Mexico, start cutting, that should provide some relief for growth. So that should be another supportive element. And then the final point is obviously what could happen to commodities, which is always an important consideration for Latin America. And there, even though China, as I said, is buying, and that is been a boon, well, the rest of the world has not. And we have seen a decline in commodities demand coming from the rest of the world. And again, the jury is still out whether the US economy is going to soft land or is going to go into recession. That could have some bearing into commodity prices and therefore into external accounts of LATAM. So a lot to watch, and avoiding the topics of politics, I'll leave that to Alberto, but that obviously is going to be another important driver for many of these countries, just because the policy stances are important considerations for what may happen to growth and to the reform drive that has been honestly in most of the region quite lacking of late. Let me stop there. Thanks, Kelly.
Alberto, would you like to enlighten us?
Thank you, Kelly. Well, first of all, once again, thank you to the Andean American Association for keeping me in mind and keep on inviting me. I love this event. It's like an institution for me. Luis and I have been doing this for many years, and I enjoy that a lot. So basically, and thank you, Maria Rosa. Thank you, Alexandra. It's always a pleasure to be here. So Alexandra basically asked me to focus on the politics, and kudos to Luis, who actually went over the whole region in like 9 minutes. So I'm quite impressed by the succinct capacity to put it on the table. So this is going to be a happening year for politics. There's going to be elections in El Salvador, Dom Rep, Panama, Mexico, Uruguay, and let's hope perhaps Venezuela. So let's see what happens with the Venezuelan case. That as I like to say, that's way beyond my pay grade. I'm not sure exactly what's going to happen there. Nobody really knows, but let me focus on the other ones. But El Salvador, I think it's a done deal that President Bukele will be reelected. Dom Rep, I'm hearing, I was in Dom Rep last week. 2 weeks ago, they're telling me that probably the incumbent is going to repeat as well. But actually, before this, and before I go to the big enchilada, which is Mexico, let me focus a little bit on the current time, because of the latest developments on politics in Latin America are very relevant. First of all, Milei. So we need to speak about Argentina. So the Argentina election is a very, very important one. Argentina is a very important country for us. Argentina has been outside of the markets for a very long time. And I think that Milei's comeback kind of reminds me to the time when Menem first won. So there's a little bit of similarities there, and that's actually good news for the market. It's very good news for Argentina. It's going to be a very tough time. It's going to be a very difficult ordeal to get the country back on its feet. But I think if anybody could have done it, perhaps Milei is the person that could deliver. Obviously, Bullrich was the candidate of the market. It was my candidate, obviously, of Wall Street. We all know, everybody that was around Patricia in terms of the economics department, the economics front. But the good news is that most of those people have actually moved closer to Milei. So what's going to happen in Argentina? Argentina needs to do three things, and it needs one very important issue, which is called luck. Argentina needs luck. For 2024, if Argentina does everything right and it doesn't get its luck streak, it's not going to work. Because the reality is that Argentina needs more rain and Argentina needs better crops, because Argentina needs to be able to recover those $20 billion that were lost in exports revenue in 2023 because of the drought that affected the country. So that's a very important component, because that will help to allow for a better equilibrium on the external accounts to take place. The first thing that Milei will need to do, and I think that's very good news, that it seems almost certain now that Caputo is going to be his finance minister. That means that the PRO is very close to Milei, that basically that Macri is 100% involved in this story. If Macri is 100% involved in this story, that means that you have increased governability in the legislative. And you need that additional governability because you need to you will need to implement a draconian fiscal adjustment process right now. Because the reality is that there's no new money. Nobody's going to give a single dollar to Argentina at this point in time, not the private markets, not the international financial institutions. Argentina at this point in time is going to have to deliver it by itself. So you either fix the fiscal right now, or you're going to have a problem. This is like I like to say. I go to the doctor tells me, Alberto, you got to stop eating McDonald's every day, or you're going to have a problem. So I have two choices. I stop eating McDonald's every day, or I have a heart attack, and then I'm going to have to stop eating McDonald's anyway. So the whole point is either Argentina fixes this problem by itself, or hyperinflation will do the trick. And the hyperinflation process is going to be a very, very complicated one. Dollarization, I think it's on the back burner. The reality is that if you wanted to dollarize right now, it's pretty much, if you wanted to dollarize now in a less stressful way for the society, you need $30 billion. There's no way you're going to get $30 billion. So either spontaneous dollarization happens and you have that, but that will go in conjunction with a hyperinflation process, or you get the new money, and again, you will not get the new money. So dollarization, Milei is probably going to keep on talking about it. That was one very important part of his campaign, but he will not be able to deliver it. So fiscal is the main issue, and the second very important issue tied to fiscal, they're going to have to follow through on the promise that the central bank charter will be changed in order to completely prohibit the central bank to finance the government in that manner, avoid having to deal with all the problems that Argentina is dealing right now. Argentina has a high inflation problem because the central bank is financing the government. It's printing money. It's as simple as that. And Argentines have been here before. They know that the central bank is financing the government, and they know that means that there's much more money flowing around. Much more money flowing around means that pesos are worth less, so you basically shift to dollars right away, and that's why we are where we are right now. So hopefully Milei will be able to deliver on the fiscal. If he has good luck, I think that Argentina has a chance to finally start to get out of this very complicated hole and eventually come back to markets and see increased investment. Chile and the referendum, Michael, the latest poll says that it's very likely that the referendum will once again fail. There's a promise from the Boric administration that if the referendum fails, they will not try again. There's risk of social upheaval once the referendum fails. I think, honestly, it's almost a given in my view that the referendum will fail. The pros are about 32%, the against about 52%. So I think it's a very tough ordeal for this for the referendum to make it through, and it will basically 18 days away from that. So it's very unlikely that it happens. But to be honest, I think this is a very good thing that finally we will be able to get out of this discussion. Chile needs to move forward. Chile is if the world is going to be able to be saved from a global catastrophe on the climate front, every single path to get to that sustainable environment goes through Chile, because Chile is the second largest, it has the second largest reserves of lithium in the world and the largest reserves of copper in the world. You need copper, you need lithium if you're going to save the world from a global catastrophe on the climate front. So Chile, if it does just a couple of things right, is going to be very okay in the next 10 years. So I'm very bullish on the Chilean story, and that's positive news. The Colombia story, President Petro lost the elections a few months ago. That was an important political hit to him. My sense, and I believe that the market agrees with me, is that with that, reduction in the governability front and the power, that means that if the reforms go through, they will probably be watered down, and there's a possibility that the reforms just don't go through. And the market seems to be okay with that, and that's one of the reasons why we have seen a relatively good performance of the FX. As of in the last couple of months after the elections. Now let's focus on Mexico. Mexico is the big deal. To be honest, I don't think there's too much uncertainty. It is Sheinbaum's election to lose. The latest polls are very clear in terms of showing that she will probably be able to win the election. President López Obrador remains a very popular president, and that popularity will be able to be transmitted to Claudia. And the key question is what kind of government she will have. And for that, I think that the main issue will be based on how the legislative elections go, how well Morena performs. Our view at XP is that it's unlikely that Morena will be able to get 2/3 of the votes at the legislative front, meaning that they will not be able to have the capacity to pass a constitutional legislation the way in an easy fashion. So that's good news. That's checks and balances, but they will most likely have a simple majority. So she will have governability. And the key question is whether or not she will be able to control the more radical sections of Morena, in order to keep the expectations from investors relatively subdued in terms of the risk coming forward. In terms of the risk coming forward from the Mexican standpoint, obviously, we have this enormous tailwind from nearshoring and friendshoring. For everybody that has been in Mexico in the last year will be able to relate to what I'm saying. I've been to Mexico, I think, 7 times this year. Every time I go, it's more crowded. Every single hotel is completely crowded. Every single hotel is getting ridiculously expensive. Last time I wanted to stay at the Hotel Presidente in Polanco, they quote me $900. So it's just ridiculous. Next time I'm going to call you, Luis, to see if you have a special rate in a hotel in Mexico. This is just getting ridiculous. But it's just more crowded every single time. A competitor of ours organized an event 2 weeks ago. This came from a client of mine, and this Wall Street bank was able to get 300 foreign investors to fly to Mexico City to participate in a conference about the opportunities that nearshoring and friendshoring are delivering to investors. I have not heard of any situation in the past in which any bank has been able to bring 300 people to Mexico City to hear about the opportunities that exist. Every person that I speak to that lives in Monterrey and does business in Monterrey tells me that every single project that comes up for new warehousing, etc., the construction hasn't even started and the whole thing is already sold. So it's pretty much it's real, it's happening. And the key question is whether or not this impulse is going to remain in place. So what are the risks? The risks obviously exist. The risks exist that Claudia is not able to maintain the more radical voices inside Morena, relatively subdued, and then you get bad news on that front. And obviously the lingering issues having to do with energy, not only because of the problem, the conflict inside the free trade agreement with Canada and the US. Something will need to happen at that point in time. My expectation is that the Biden administration will not do anything on that front before the 2024 elections. in November, obviously, because it could create a lot of noise on the immigration front and et cetera. So it makes no sense really to rock the boat on that from that standpoint at this point in time. But it's a lingering issue that will need to be solved at some point. So what we're hearing is that Claudia seems to be more prone to fixing the problem, and that would be very good news if she's able to deliver that in 2024, at some point 2024, 2025, because Mexico needs it from the standpoint of having some increased stability in the relationship with the US. And because if you don't fix the energy front, you're going to have a significant problem if you want to deliver on the nearshoring and the friendshoring part, because Mexico is lagging very significantly on the infrastructure front, and energy is one of the main components of that problem, of those obstacles to allow for Mexico to just utilize all the opportunities that will be coming around because of this new move. A good friend of mine from Monterrey, every time I talk to him and ask him, hey, David, what do you think about this friendshoring, nearshoring issue? He says, well, Alberto is very real, but I'm very glad, and this is actually his actual words, I'm very glad that it is happening much more slowly than I was expecting. And I was like, why? I said, because if he were happening faster, I would not have the capacity to export my goods to the rest of the world, because the infrastructure is simply not there to deliver on what may come forward once we continue to see this increased foreign direct investment. So I think I've spoken for enough time. I'll stop at this and wait for if there are any questions. I'll pass it to Minister Ocampo.
Thank you very much, Alberto. I want to encourage everyone, if you have any questions, to please post them in the Q&A chat so that we can address those questions at the appropriate time as well. Jose Antonio?
Okay, well, thank you. Thank you to Maria Rosa, Alexandra, and Kelly, and of course to the the Andean Latin American Association for the invitation. I'm very glad to be back to these meetings after my period in government, here back in New York. Let me perhaps complement what has been said by Luis and Alberto to point out actually what I see as some strengths, but also some weaknesses of Latin America, and particularly of the 5 largest economies, with the exceptions of Argentina and Venezuela. Argentina, because of the issue that Alberto just mentioned, is a country that is in deep crisis, and we have to still see what the new government will do, because the possibility of actually even a hyperinflation, as Alberto mentioned, is likely, and certainly the idea of dollarizing, which was a top issue in the campaign, was not there. And the other I will leave aside is Venezuela. Venezuela is recovering, but my estimate is only about 30% in terms of GDP of what it was before. So it has a long way to go, and we still have to see whether the political dimensions, the political agreement of having elections works effectively, or if it does not, whether the U.S. will be back to restrictions of some sort. Now, for the other economies, let me start so the other 5 economies, which is Brazil, Mexico, Colombia, Peru, and Chile. Let me start by saying some positive things. I mean, first of all, the good thing is that foreign direct investment is coming in significant magnitudes. Actually, last year we had the historical peak of foreign direct investment, and it continues to come very strongly, even despite in some cases of political, question marks, let's say. That's one positive thing. The other positive things are the export performance. Actually, this year there is a contraction of international trade, which is, although the most recent numbers say that maybe that is coming to an end, but that's a very important issue in world trade. Latin America, in contrast, will have a small increase in trade volumes. The Economic Commission for Latin America actually estimates about a 3% growth, which is, of course, a very positive outcome. And there are many interesting possibilities. You can mention them. I mean, actually, Alberto mentioned, for example, nearshoring, which is, of course, a good opportunity fantastic opportunity for Mexico, but for many other countries, Central America, Caribbean, and Colombia, which is actually not estimated. But there are also commodity possibilities, and in that regard, let me say that the food production, which is a very important point, and food prices actually continue to be relatively high in international markets. This is a potential possibility for many countries. I would say particularly for Argentina and Brazil, but also to other countries to some extent. There is also the transition minerals, which have already been mentioned. This is, of course, the most important cases are lithium and copper, but there are others that could also be important. And in terms of copper, for example, all of the Andean countries in South America are potentially important, including Colombia, which does not exploit its copper too much, but could do so. So those are, I think two aspects which are good: the foreign direct investment and the possibilities. Perhaps I should add green energy. The possibilities of Latin America being one of the best potentially in terms of green energy production, solar and wind energy, is very important, not only because of the possibilities of diversifying its energy production, but also because it could be the producer of energy-intensive goods. For example, energy-intensive metals. We'll start to talk about, for example, green copper, green steel, and that's an interesting potential prospects for Latin America. So those are two good things. What are the negatives? I would say the negatives is that portfolio flows continue to be very weak and expensive for Latin American countries. This is, of course, a problem of private financial markets, which are procyclical for emerging economies, and that's what Latin America is perceiving now. And then there is, of course, the effects of this very complex global conjuncture, which in this issue of slow growth with high inflation, let's say. Although inflation is coming down and growth has been a bit better than expected this year, a big question mark about what is going to happen next year. I mean, Luis already mentioned that. Anyway, so now in terms of growth prospects, let me perhaps mention that the performance of Latin America is in general mediocre. We still have 2% or less overall growth for the region. That's what the most international organizations, although the IMF is perhaps the most optimistic, but the private projections are actually a bit weaker than the IMF projections. Now, in that prospect, there is a very peculiar contrast between these five economies. This year, Chile and Peru, as already pointed out, are having negative growth. Colombia is going to have a much slower growth than initially expected, but Chile but Mexico and Brazil are doing relatively well. Next year is going to be the opposite. According to all the projections, let's say Colombia, Peru, and Chile will grow a bit more, but Brazil and Mexico will contract. In the case of Mexico, the big question mark is, of course, in the United States. If the U.S. doesn't go into recession, but only into a soft landing, Mexico may be slow down less than is expected now. In the case of Brazil, according to the information that I get, they are very concerned about El Niño and the effects El Niño will have on agricultural production. Anyway, let me finish with the issues of imbalances. And in that regard, let me say that the tendencies are generally positive for all countries. When you go topic by topic, let me say, for example, fiscal imbalances. The only country that had a significant deficit was Colombia, which is reducing its deficit now in a significant way. In the current account, Chile and Colombia were the two countries that had a higher deficit. Both are reducing the inflation has come down in all the 5 countries, less so in Colombia, which is going much more gradually. Still is in 2 digits. Hopefully, actually, November will be 1 digit, but we have to see. But generally speaking, but at the same time, however, the central banks are not reducing interest rates. So they are the precursors of what is being talked about of the developed countries. That inflation comes down, but the interest rate will remain a bit higher for some time. So in that context, of course, means that the growth prospects are likely to be slow for next year. Expectations for faster growth will have to wait, I think, until 2025. Thank you.
Thank you very much, Jose Antonio. We have a couple of questions that have come in. The first one is for you, Luis. For Peru, do you expect any improvement in stability, either economic or political, in the near future?
So, as I mentioned, 1% growth next year after a decline of 0.5 this year. So it's better growth dynamics. Some of it is honestly low statistical base of comparison that is going to be helping next year. As I said, the terms of trade are supportive. However, 2.1% in 2024 is still below what we still estimate to be potential growth in Peru, which is 3.5%. So this is still below potential growth dynamics. And we're not expecting anything major on the political side. Looks like the political support, although it's hard to express it as political support, but the reality is that the president there seems to be no appetite to go through another round of trying to impeach the president or remove her. And part of it, to be honest, is probably a selfish attitude from the side of Congress, which is there's no vice president. She was the vice president. There's no vice president below her. So if she were to be impeached or ousted, the Constitution in Peru says that the Congress would have 4 months to call for an election, and they probably don't want to lose their job. So it is a bad equilibrium, but an equilibrium nonetheless. So the expectation that we have, at least in our base case scenario, is that the next election is on schedule in April 2026. So we still have 2.5 years to go for this administration. Hopefully there's more, at least try to push some reforms, but it's difficult to expect much given the political fragmentation, polarization that exists in the country. So the environment seems to be supportive, and hopefully Peru will do better growth-wise. But in terms of asking for big reforms, probably need to wait for the next election.
Thank you, Luis. Alberto, how do you see investor appetite for private markets, including private equity and real estate, in places such as Colombia, Mexico, and Peru?
Well, Kelly, that's a very good question. And I think that the good news is that 2024, under most logical circumstances, assuming that the Fed is done, and that we continue to see some deceleration, some material deceleration in the rate of growth of of inflation in the United States, basically assuming that we continue to see disinflation in the United States, which allows the Fed to follow inflation down to keep real rates in the United States stable, that should also open the room for Latin American central banks to deliver on rate cuts, because you will have two very important components there. If the Fed is able to actually start cutting rates in 2024, the most likely scenario is that the dollar is going to lose some value. So if the dollar loses some value, then the Peruvian sol, the Brazilian real, the Mexican peso, the Colombian peso should be able to gain some real gain some value, some real value against the dollar, and that is disinflationary by nature, which means that inflation in the Latin American countries falls, which means that the central banks are able to cut rates. And if you cut rates, that is going to help in a very significant way the real estate sector. Because one of the reasons why the real estate sector in Latin America is suffering so much at this point in time is the same reason why the United States real estate sector is suffering so much at this point in time, because mortgage rates are just ridiculous. Let's not forget that before the pandemic, a typical 30-year loan in the United States was 3.2%. Right now, most Americans won't be able to get a rate below 8%. So that's basically more or less tripled, which means that the mortgage payment has almost tripled in the United States, and that is the same situation everywhere else. So the affordability on the housing front has been reduced aggressively because of the hikes that we have seen in interest rates all over the world. But again, the good news is that rates should start to come down, and if rates start to come down, then the real estate sector should be able to see some increased activity. And the good news is that the bar is so low that 2024, the rate of growth of real estate and on the housing sector all over the world is probably going to deliver very significant growth rates, because the comparison base is very, very, very low. So that will also help to boost some of the GDP numbers in the region, and that will help to reduce the perception of risks that affects the region. So that let's hope for the best, that continued disinflation lingers, and then we see some rebound on activity in Latam.
Thank you, Alberto. This next question is for any one of our members of the panel. Perhaps Jose Antonio can start. Considering the potential impact of the upcoming 2024 U.S. elections, how might the outcomes or policy shifts influence investment trends, market sentiment, and economic partnerships between Latin America and the United States?
Well, tough question. Hopefully it will not happen, but let me say that I probably the most threatening thing is protectionism. If the U.S. under new Trump administration become protectionist, the prospects for Latin America weaken in a significant way, because as I said, there are many interesting prospects for Latin America in international markets, and it's actually doing relatively well. So that's, I think, the most important point. Also, and perhaps associated to that, is what is going to be the relation between the U.S. and China. If they weaken even more than they are now, although I guess the Biden administration has sent some peace signals to China recently. But if Trump wins the elections and it becomes a more distant relations with China, that's also bad for Latin America. Basically because Latin America has very strong relations with China in trade, and actually Chinese investment is also coming in relatively large magnitude to Latin America. So the prospects on those two fronts, I think, are not very positive. I think probably the first one, the protectionism, is probably the worst.
Actually, Kelly, if I may add something, which I think is very relevant. Many people perhaps have forgotten about this issue, but under the guidelines of the USMCA, the new the NAFTA 2.0, this agreement needs to be renewed every 6 years. So if the president is, if Trump wins the election again, and there's a complicated relationship in between the US and Mexico because of continued concerns regarding immigration, outsourcing, whatever, the typical, as Minister Ocampo was saying, the protectionist spiel of like the first Trump administration, assuming that the second Trump administration is also protectionist in nature, then the markets could start to become a little bit concerned about whether or not the US wants to renew this agreement. My sense, again, Kelly, I need to be very, 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 very specific about this. It would be such a complicated ordeal to stop the integration of Mexico and the US that I don't think is going to happen. But if the relationship is poor, let's say Mexico doesn't agree to fix the problems on the energy front, on the genetically modified crops, all those things that are lingering in the agenda, then one could not just completely downplay the possibility that the US says, you know what, I don't want to deal with you anymore, and then we have a serious problem. So let's hope for the best that doesn't happen. Politics is the art of the possible, and hopefully not. Nobody's willing to commit suicide, economic suicide, and political suicide here. But there's one that I have heard this comment from a couple of investors that are very knowledgeable of the story. So let's hope for the best, and that doesn't happen.
Luis, anything to add to that?
Yes, so we actually recently published a report. I mean, clearly markets are not yet, focusing much on the U.S. election, right? I mean, strictly speaking, we don't know who the candidates are, and a lot can happen in a year. But we do point to this election as something that markets overall, and certainly participants in emerging markets, including those in Latin America, need to watch very closely, very carefully when we get closer to the event, because things can move a lot, as Alberto and Jose Antonio have mentioned. We do come up with a calculation. One of the ideas that Trump has mentioned is he's talked about a universal 10% tariff, right? I mean, a very protectionist measure of being adopted across the board. And this is to protect US industry and to prevent so much competition from foreign production across the board. So if something like this were to happen, we have an estimate that, this could lead to a maybe 4 to 6% appreciation of the dollar, broadly speaking, in term-weighted terms. That would be obviously, quite detrimental for emerging market currencies and other currencies, other reserve currencies as well, right? So, that could lead to another bout of, inflation pressures and central banks being forced to maybe hike rates once again. So, again, all kinds of bad scenarios emerge from that. Markets, as I said, are not pricing this in yet. Maybe you do see, when we look at the FX vol trading. So some investors are looking at Mexican vol packs around the elections, remembering what happened in the previous election when Mexican peso was actually one of the currencies that came under most pressure when Trump got elected. So, more to come. So for the time being, I would say, though, that the U.S. election is not yet has not yet become a tradable. There's no trade strategies on, but as we proceed through the year, we confirm who the candidates are. We start to look at election polls. I think that we're going to see markets moving in one direction or the other.
I think we have time for one more question prior to wrapping up, and this one is for you, Alberto. Do you see U.S. investors regaining their appetite for assets that offer local currency exposure?
Well, under my base case scenario, yes. Actually, let me give you a couple of numbers, Kelly. Let's suppose I'm right on the expectation that inflation continues to come down in the United States. My view is that inflation will be below, core inflation will be below 3% by year-end 2024, which means that the Fed will need to follow inflation down in order not to generate additional headwinds to the economy. not to stimulate the economy, but just to avoid having to put additional headwinds, because what matters is the real rate of interest, not the nominal rate of interest. So if the Fed reduces rates, that means that central banks all over Latam will be able to follow through. Mexico will be able to follow through. Colombia will be able to follow through. Brazil will be able to follow through. And most relevant part is that probably the 10-year bond in the United States will rally from, let's say, 4.4, which I think is today's yield, to, let's say, 375 or something like that, 375, 350. If that happens, and let's say you buy a Brazilian 10-year local bond with a real at 490 or 495, whatever it is today, with a yield on north of 10%, Lucho, help me here, about 12%, if I'm not mistaken, 11%, 12%. If you buy there and you hold it all the way to the end, the currency is probably going to appreciate because the Fed is lowering rates. And this is, again, assuming that we don't have a crazy world by the end of 2024. Then that means that the real probably goes to 470, 465. And since the Central Bank of Brazil will be cutting rates, then the yield of the 10-year bond will probably come down. Bottom line, the simulations that we do inside XP, this is a trade that could pay you 25% in dollar terms easily in 2024. And that's a good trade. If you're going to be able to make 25% on a local market trade, I think that's a winner, and most funds will be very happy about that, especially after the last couple of years we have been horrendous for fixed income investors. Actually, so that everybody knows, 2022 was the worst year in history for fixed income investments, and let's hope for the best that 2024 doesn't come even close.
I can just add to that, Kelly, for a sec. So, one of the biggest issues this year has been that with the Fed at 5.25%, 5.5%, investors didn't have much of a reason to go to emerging markets in general, particularly local currency bonds or hard currency, because, they could get, 3-month money market in the US getting 5.25%, 5.5%, risk-free, right? Underlying is T-bills, US T-bills. So why bother, right? But as the Fed starts to cut rates next year, I think that there's going to be renewed interest, we think, in emerging market local currency bonds. And Latin America stands to gain because, as Alberto mentioned, and I referred to before, we expect continuation of policy easing, central bank cuts. If the Fed cuts, that's going to provide, more room for cuts in Latin America as well. So, local currency bonds will probably be the place to be.
Thank you very much, Luis. Maria Rosa?
Yeah, I just got one question for Alberto about Ecuador and its brand new president, Daniel Noboa.
Well, I'm quite surprised to see that. Well, I'm actually very happy that he won. He's a very young guy. His views are very market friendly, very business friendly. As far as I understand, he's only going to be there for a couple of years until Lasso's term is over. So, but let's hope for the best. I'm sure that the conversation with the IMF is going to be very fluid, and let's hope that he has some luck, that 2024 proves to be a good year for commodity prices that will help Ecuador a lot, and that your country is able to get out of this complicated situation, because 2023 was a very complicated year for Ecuador, and I feel for my Ecuadorian compatriots, because it kind of feels like when Colombia was in a very tough situation on the violence front. The murdering of the candidate is a very tough situation.
Yeah, okay. Well, thank you very much. Let's hope for the best, and good luck to all our countries. Thank you, Alberto and Luis and Jose Antonio and Kelly. It's been amazing to just listen to you, and I want to congratulate you all, because such a huge and important subject, you can manage it in such a short time and so expertly. So thank you very much. And also I want to thank our staff, Alexandra Vaquerizo, Laurie Dominguez, and Linda Calvet, for their wonderful help. And happy holidays, everyone. We'll see you soon. Take care. Great afternoon.
Bye-bye.
Bye-bye. Adios.
Thanks, all.
Qué lindo. Gracias. Chao.